Morning, everyone. This is the live daily market outlook from Windsor Brokers for Thursday, 19th of July 2012. I guess we had some technical problems with the sound again, and I'm not sure whether anything of this from the beginning, from past few minutes, came out or not. So just to be on the safe side, we're going to make it from the beginning. As said, Thursday, 19th of July 2012. After a rather quiet session during the Asian trading hours, the instruments are again gaining pace. Euro is heading higher after opening of European session, breaking above 123 barrier that capped the upside in past 2 days, and as well as sterling breaking above its recent peak at 156.70 zone, heading towards barriers at 157.20. Dollar losing ground again. Dollar Swiss is currently attempting below the near-term base at 97.50, with dollar index dipping lower, testing the trend line at 82.70 zone at currently. Dollar yen has lost ground again after failure to clearly break 79.00, previous strong support, now resistance 79.15 seen so far. Had a fresh weakness with the near-term outlook still keeping the downside in focus. Some corrective action might be seen on the overextended technicals, oversold technicals, pardon. The top performer, I would say, is the crude oil that broke above $90 per barrel level, heading higher currently at 90.69 as the increased tensions in the Gulf and Middle East region are one of the main factors that push the oil price higher. And it seems that this might be signal also of end of the larger downtrend from the beginning of year from 110.53. That was the 1st of March 2012 high, and 1st of May peak at 106.41. This descent that dipped to 77.27. As I mentioned, 87 was the initial barrier, and then 89. And now break of these levels is most likely signaling the fresh direction of the crude oil, and the signals possibly end of the larger downtrend. As most of analysts agree, this is mainly driven by current tensions in the Middle East and the Gulf zone, and basically this is one of the main factors that drives oil higher. Also the comments, recent comments of OPEC member and Saudi oil minister that ideal price for the OPEC members would be around $100 to $120. And recall just what I mentioned in one of our previous sessions, that oil producers can always play and bring the oil price higher, as we witnessed in the recent period, despite a strong slowdown in most of the world economies and the reduced demand for the oil. Again, the oil price is gaining pace and heading higher, with the $100 now seen as a quite realistic point, especially in case of any escalation of the conflict in the Persian Gulf and the Middle East. From more of this, of course, we will see in our technical part. Just to have a quick look at today's calendar. Swiss trade balance was already released at 6 o'clock GMT. 2.25 million trade surplus, 2.25 billion Swiss francs trade surplus was shown on today's release for June, better than expected. 2.21 billion forecast, however, lower than May's release at 2.48 billion Swiss francs. Still to come, Eurozone current account at 8 o'clock GMT. A surplus of 5.3 billion euros is forecasted for today, better than April's release, which showed a surplus of 4.6 billion euros. UK retail sales for June are due at 8:30 GMT, and the decrease from 1.4% of May's release is forecasted for today at 0.6%. From America and Canada, 12:30 U.S. Weekly jobless claims due at 12:30 is set at 367,000, higher than the previous week's release at 350,000. That might be signal for further slowdown in the job market in the U.S. With the Canadian wholesale sales at the same time for May expected significantly to drop to 0.2% compared to 1.5% of release of April. At 1400 GMT, U.S. existing home sales for June, consensus for today is 4.63 million units, more higher than the previous release of May, which showed 4.55 million of new homes. Philadelphia Fed Manufacturing Index for July at the same time at 1400 GMT -8 is today's forecast, better than the -16.6 release of June. And finally, at the same time, US leading index for June is forecasted at -0.1% compared to 0.3% release of May. We're going to take a look now at the markets and see the latest movements as the market is getting active again, and see what we can expect during today's European and the US session. Starting with Euro, as the single currency was congested in the past a couple of days around the 123 zone, where the 55 days exponential moving average capped the upside with brief break above at 123.15, all seen from the action. However, the outlook, short-term outlook from 121.61 double bottom of last week was still maintaining positive tone despite choppy trading and the sharp dips that left a series of slightly higher lows at 121.74.88 and the latest one yesterday at 122.15. Current break above 123.15 is expected to open way for further extension higher, as hourly studies are now firmly in the positive territory, with the 4-hour chart once just breaking above and seeing potential for further extension higher. Immediate target at the upside is 123.33, high of 10th of July, ahead of 123.63, low of 5th of July, as well as 38.2% retracement that are seen as the next immediate targets on the upside in case of clear break above 123.15. On the downside, 123 now offers immediate support ahead of 122.75, and I would say only loss of levels close to 122 zone would be harmful for the pair. 122.15 low of 18th of July, yesterday's low, and trend line support at this zone 122.12. Loss of these levels would turn the focus lower. So far the pair remains well supported, and we need to see the clear sustained break above 123 in order to resume the near-term recovery of the broader down move from 126.91 that bottomed at 121.61 so far. The cable also breaks higher above 156.77 highs after being congested in the past 2 days, but near-term action was still aligned towards the upside as studies maintained slightly positive tone despite moving in the sideways mode during the Asian session. Break higher now is approaching 157.00, our initial target, and 157.21 high of 12th of July 2012, ahead of a more significant 157.76 peak of 20th of June 2012. Support was also break above descending trend line of 157.76 through 157.21, with yesterday's close above this support, keeping the upside in focus, with today's action higher now, increasing possibilities of further recovery. Upside so far offers remains quite well protected at 157.20, 157.50, where it's a 200 days moving average, and we need to see break here in order to resume the latest bounce of 153.92, low of 12th of July 2012. Break above here is also required to improve the daily studies that are still holding around their midlines, and need to see some stronger action in order to improve and possibly open way towards next barrier at 157.76. So on the upside we have quite strong barriers, 157.0021 and then 157.50.76, above which is to further to enter the fresh phase higher for further retracement of the down move from 163.00 peak of 2012 to 152.67 low of 2012. As mentioned at the beginning, the dollar yen again lost ground after brief correction from 78.67, failed at 79.15. 79 was previously the range support, range floor, as well as this zone was 200 days moving average, with a brief break higher in the past 2 days seen as false. The pair again dips lower, and the most significant was a loss of 78.67 and 78.60 that dipped so far to 78.46. This was the low of overnight of yesterday. Pardon. Brief corrective action was pardon, the low of overnight. Brief corrective action was seen on oversold hourly studies, showed not much of recovery, as 78.64 was seen only 20 ticks, as the pair seems to be again attempting a lower. At least there is a sideways, a near-term sideways movement seen currently. We need to see the gain of minimum 79.15 in order to signal some stronger recovery. Basically 79.15 for now is expected to limit any stronger corrective action. Before this, there is descending 20 days moving average at 78.71 and the 55 days one at 78.87, ahead of round figure resistance at 79.00 and the high of 17th of July at 79.15. More focus seen towards the downside, as studies are firmly into negative territory, though some overextended conditions again to say might be signal of some brief corrective action. Main focus on the downside lies at 78.45 is our interim support, yesterday overnight's low, ahead of 78.00, and the key one at 77.65, low of 1st of June 2012. Only break above 79.15 would ease the current bear pressure and allow for some stronger recovery, but basically break above trendline resistance at 79.50 that also marks a previous range midpoint would be more supportive and would avert immediate downside risk. The dollar Swiss lost ground again after a brief corrective action that was with downside being protected by 55 days exponential moving average at 97.50 zone, is now attempting again below this level, 97.45 seen so far, with the 4-hour studies now breaking into negative territory, and hourly ones losing momentum and already being negative, seeing potential for further retracement of the latest stop leg from 94.61 to 98.71. Immediate support 97.36, low of 10th of July, ahead of Fibonacci support 38.2% at 97.14 and 97.00 round figure support. Risk would be seen on loss of 97.00, 96.80 levels. That is seen as a break point that will keep the upside protected in favor of a stronger corrective action of the broader uptrend. The latest higher low seen at 90.41 at 1st of May 2012, with the trend line support standing at 96.36, and basically break of this would be harmful for the larger picture of dollar Swiss. As mentioned in the introduction, the crude oil is heading higher after finding a ground at 77.27. Initial leg higher was capped at 88.97 with the subsequent corrective action contained at 83.64. Current rally through 89 level and the 90.00, and now heading towards next barriers. 91.00 is round figure resistance, and then we have a 91.84, 50% retracement of 106.41 to 77.27 ahead of static barrier. 92.00 round figure resistance and 92.16 peak of 29th of June. Positive tone as is seen on the daily studies. However, some loss of momentum, and the stochastics started to turning lower, might be signal of next corrective action before bulls resume higher. Also, the moving averages are still pointing lower and still keep the upside question mark above the further gains. With the break above 92 zone, I would say being to be very supportive and open way for a stronger gains. Immediate support at 90.00 previous resistance and 89 as a previous high. Break below. Do apologize for this. Break below, I would say 86.40, the recent, and especially the 83.64, the recent higher platform that also marks near 50% retracement of the recent rally, would be weak. It would be signal of further weakening. Until then, any correction should ideally find support somewhere above 87 level for fresh extension higher. As said, mainly fundamentals are driving currently the oil price, and the likely scenario would be further extension higher, possibly to see extension towards $100 per ounce per barrel, pardon, in the short to medium term. And finally, gold set still lacking direction, being entrenched between 1567 and 1598 range, with the near-term studies still aligned more towards the downside after a repeated failure under 1600 level. 4-hour studies are also quite weak, and the situation remains fragile and will remain fragile as long as 1600 stays intact. That might keep the focus still turned towards the downside. Basically, at this point, we have rather neutral movements with a range of some 30 pips, with the gold moving within the range of some 30 pips currently. But a larger picture is still holding a negative tone, as 1590, 55 days moving average, and the 1600 and 1614 90 days moving average keep the upside protected. Still see potential of further extension lower, 1554, 1548, and finally 2030 zone seen still in focus, as long as minimum 1600 level that offers initial barrier stays intact. That was all for today. Now we have a questions and answers session. Please, if you have any question, to submit it. We have the Aussie dollar question. As shown on the daily chart, the pair resumes its short-term uptrend from 95.79 1st of June low after struggling to clear 200 days moving average. Initial break was capped at 103.26 and the subsequent easing dipped to 100.99 where the support was found. The past couple of days strong rally broke above 102.80 where is the 200 days moving average, 103 as a figure resistance and 103.26 heading higher towards hitting fresh highs last time seen at the end of April, beginning of May, with the 104.14 seen so far. This is the latest price today. Quite a positive structure dominate on all time frames. However, lower ones are 1 and 4 hour are in overbought territory, and we might see some corrective action preceding a fresh rally higher. The upside side remains in focus with our next significant target seen at 104.73. This is the high of 27th of April 2012. As the previous target, we mentioned it I think yesterday at 103.68 and 104.00. The first one is the 61.8% Fibonacci retracement, and the figure resistance have now been cleared. Way opened towards 104.73 and 105 with the corrective action that is now signaled, no firm signal yet given to face initial support at 104.00 and 103.26, quite significant support previous peak, along with the 103.00 zone where it's also the ascending 20 days moving average and the 102.50 55 days exponential moving average, and ideally this should contain dips in order to keep the short-term bulls intact. Any further question, please? It seems no more questions. I would like to thank you all for being with us, and expect to see you again tomorrow at the same time at 7:00 GMT. Thank you again, and wish you a nice day and very successful trading. Good luck.